Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Emanuel Avina, who's the president of Avina Financial Group, and we're going to be talking about how to use life insurance for retirement planning. Emanuel, welcome back to the program.
Hey, Mike, it's my pleasure to be here. Thanks for having me.
You are welcome, and I love this topic because I find that sometimes people hear one thing and they're like, hold up, retirement planning I get, but using life insurance for retirement planning. So I want to dive into that because I know that a lot of people have some preconceived misconceptions about the term life insurance. So bring us up to speed. What are some of the things that you work with your clients on when you're helping them plan for retirement using life insurance?
Yeah, absolutely. I think, one of the things is, trying to get over that hurdle or misconception of life insurance and its value that it can bring. And so, really how we look at things is we really try to look at four different quadrants, if you will, with any particular client. So we're looking at cash reserves, we're looking at assets, we're looking at taxes, and we're looking at insurance. All four of those essentially make a good and sound financial plan. And so the reason why I bring that up is that if you're missing any one of those components or any one of those components are not properly planned for, then ultimately it can have a negative impact on your retirement. And so it's important that each one of those quadrants, each one of those boxes are checked as you're doing your retirement planning. And a very interesting tool that can be used is life insurance. Most people understand it as sort of, instead of life insurance, it's death insurance, right?
Yeah.
When I pass away, that money is going to go to my beneficiaries. But the reality is, probably in the last 15 to 20 years, there's been some really great life insurance products that have come out that can really be utilized as an effective retirement income tool, which is really, really important. And so those are the conversations that we're having with clients, and then really sort of driving down deep in terms of how it can impact and be beneficial for them to consider that in their overall retirement plan.
Yeah, I really think that that's a huge point that you bring up in when you described, all the different varieties of areas you look in a client's wealth that could impact things positively or negatively. Your income, your taxes, that could be a hole in the bucket is, taxes.
Mm-hmm.
You can't eliminate it, but you can, mitigate it to make sure that you're in the best tax situation. And, you don't think things are going to happen to you until they do. And so having those contingencies in place and that insurance with the death benefit, but I love your point that you're bringing up. It really is life insurance. It's not death
Mm-hmm.
insurance. There's some benefits that will be brought to someone in the living years. So talk a little bit about some of those things that people might not be thinking about where you're going to get some benefits while you're still alive in using a good life insurance policy.
Yeah, absolutely. So there's a couple of ways that they can be, life insurance policies can be used to give you benefits while you're living. We won't probably go into too much detail, but just on a very high level, there are what are called living benefits. These are benefits that are written into the life insurance policy that will benefit you while you are living. These can be things like a chronic care rider or long-term care rider that will allow you to access the death benefit early to pay for medical expenses or nursing home care, things of that nature. And so it gives that life insurance policy, instead of it having one purpose, it allows it to have a second purpose and protect another area of your financial or retirement life that you may be looking to protect. And so that's a living benefit that helps you while you're living. Now, in addition to that, there is the ability to draw income from the cash value of these cash value life insurance policies. And there's a couple of real big benefits to that. Number one is if they're drawn up properly and designed properly, you can create a pretty steady stream of income throughout your retirement. And the way that we design them is that income, again, if designed properly, is tax-free income. In other words, that money is coming back to you and you're creating a tax-free income stream, which is something that is really, really important when you're looking at retirement planning, because ultimately people generally are looking at, well, what are my expenses? And then how do I meet that expense? But they don't factor in taxes, and they don't factor in, well, if I stack a bunch of taxable income on, now I'm maybe I'm not in a lower tax bracket in retirement. Maybe I'm even in the same or higher. And so there can be some negative ramifications of that. So with some proper planning, you can create some tax-free income using the cash value from a life insurance policy.
Now, you know how a lot of times when you're hearing things on TV or radio and you're like, well, the fine print is, or, you need to consult with your tax. You just confidently said the words tax-free. And I think that's really curious, and I want to clarify that because I think a lot of people think, well, I want to be tax efficient with my savings. I want to make sure that I'm doing the most important. And maybe it's like, well, here's a vehicle that I've read about somewhere that is tax favored. Well, you're saying a life insurance policy, when properly set up, can give you tax-free growth. That's a strong benefit for this type of vehicle.
Yeah, 100%. The reality is they're designed in such a way that there are provisions that are written into life insurance policies that allow for you to essentially, you are accessing a portion of the death benefit early. So as an example, if that death benefit is $500,000, to use a round figure, you are able to essentially borrow from your cash value and allow that money to come back. And that money, or that money that you have withdrawn, does not necessarily need to be paid back. And what will happen is it will lower the potential death benefit that is paid out to any beneficiaries. So not to get too deep into the woods, but that's sort of the mechanics behind it. And again, it's all about proper planning. It's about finding that advisor and that guide, if you will, for your retirement, to design it properly and go through and really explain it in a simple way to say, if we design this properly, you'll be able to get X amount of dollars from here on a tax-free basis, and share with you all of the circumstances in which that is can be a realistic possibility for them. So that's the important thing, is find the trusted advisor and then design the plan appropriately. Make sure it's somebody that has done this before and has the expertise and experience designing the plans appropriately.
Yeah, 100%. Because I think that, the worst thing in the world is to go, oh, I heard this, so I'm going to go click, set this up. And it's like, no. You needed to do this first or do it this way. And so that's a really big point is, many times, there are, and like we talked about when we connected last time about Social Security, when you make a allocation for your Social Security, it's irrevocable. So, you need to plan up front and have someone guide you. Well, in this case, there's some wonderful upsides, but you got to make sure there's some great decisions in setting it up. And it makes me think when you said living benefits, I love the idea that you gave these two aspects. Number one, when you fund it, there is some cash value that grows tax free. That's great. And then also, if there was an event where you needed to access the death benefit early while you're alive, like if you had heart attack, cancer, that kind of thing, there's some provisions that can be set up in there so that you could take advantage of that. Those are really big points for people to keep in mind. But makes me think when I hear living benefit, well, how about this? I've got living expenses. And, you and I have been talking about our families, and it's like, you've got college, and college costs $1 or $2. And so talk a little bit about if there's an opportunity to use this vehicle to help out with that living benefit? Can you help fund college with this type of thing?
Yeah, absolutely. So, yeah, I mean, in addition to, retirement or using life insurance as a retirement planning tool, it can absolutely be used as a college planning tool. And it kind of has a double benefit in that not only can you access cash value to help pay for college tuition, but when you complete what's called a FAFSA, which is the form that you have to complete, it's a federal form that you complete in order to see if you can receive any financial aid. When you have funds that are allocated to a life insurance policy, that cash value in that life insurance policy is not counted on the FAFSA. And what that means is it doesn't impact your expected family contribution, EFC. Anybody who's had a kid in college knows that term, expected family contribution, and probably knows the term FAFSA because they've had to fill one out to see if they can get financial aid. And so absolutely you can use it as a college planning tool, and it has a double benefit in that anything that's built up in there is not going to count against the EFC or the expected family contribution, whereas a traditional investment account, as you will, has to be disclosed on the FAFSA and can impact the expected family contribution, which means you will receive less financial aid in most cases.
Yeah. That's a really good point to think about, because I think a lot of people are like, I have no clue. And if this life insurance has these other benefits and it also couldn't help. Now, shield is the word I'm thinking of, but it's shielding in a positive way, a legal way. It's not, hiding, it's shielding, it's protecting some of your assets in this vehicle so that the EFC doesn't trigger with that higher number. The EFC, your effective family contribution, is showing a lower number because you just scooted some of your funds into this.
Yeah, it's a shelter, I think, is a term that we probably use pretty often in retirement planning. There's tax sheltered vehicles, and this would be one that is sort of FAFSA sheltered in that you can build it up, and it's not going to count against or penalize you for having that savings. And so again, with proper planning, the cash value of a life insurance policy can certainly benefit you in your college planning. So you can start when your kids are younger. You can start when your kids are a little bit older. So it's a valuable tool that should be looked at. Absolutely.
Yeah, for sure. And then, like you were saying a second ago about accessing the cash accumulation in the contract, the life insurance contract, if you've set it up soon, far enough ahead of when you need college, maybe that's another way that you can tap into it instead of borrowing against whatever, bank or Sally Mae or whatever. If you've got it in your account or in your life insurance contract, you can then borrow against that while still it's shielding and protecting then that EFC too.
Yeah, 100%. With anything, any financial related planning, the earlier you get started, the more beneficial it is going to be for you. And so life insurance is no different. The earlier that you start the planning, the better. That gives more time for compound interest. That allows you to build up more savings in there. And all of those for all of those reasons, it makes sense to start your planning as early as possible. And absolutely, the bigger that cash value is able to accumulate, that means you're maybe not needing as much financial aid. You're not needing student loans. I mean, gosh, you can't turn on the internet without hearing, how much student loan is out there. And so this is a way to sort of fight that on your own. With just some proper planning, it can really benefit and help your child with college.
For sure. And then it would keep you from having to tap into maybe some of your other retirement accounts that are out there. So then that preserves your retirement planning for your wealth building. So that's great. And it kind of makes me think too, when we're talking about taking care of our family, our kids, that really, the word legacy pops into my mind. And it's like, you know what, I'm making sure as much as possible that my kids don't have that huge, student loan debt, like you just just mentioned. Well, when you think about legacy and you go, okay, at the end of the timeline when we're kind of looking forward and I want to pass along or transfer my wealth to my family, doesn't this kind of planning with the life insurance have some benefit that way? Because you already mentioned tax-free. Well, what other options does that help you when you're trying to transfer your wealth to your family to create that family legacy?
Yeah, absolutely. Well, under current tax law, death benefits from a life insurance policy transfer to beneficiaries completely tax-free. And so that's a very effective way to transfer wealth from yourself to a beneficiary is life insurance. So that's just another kind of arrow in the quiver, if you will, of how life insurance can be used. When you think of, as an example, a traditional retirement account, a 401k or an IRA or 457, whatever alphabet soup you want to look at, that most of those accounts were done on a pre-tax basis. Mm-hmm. So upon your passing, they are then passed on to your beneficiaries. And under current law, you have 10 years, unless you're a spouse. If the beneficiary is not a spouse, they have 10 years to withdraw those funds, and it will be taxable to them as ordinary income.
Because the government needs to get their tax money at some point. Yeah. And you didn't pay it when it went in because it was pre-tax. So that's a really good point.
Yeah, 100% is they want to get their taxes, and so I've seen situations in which there's children that are earning a good income, they're in a high tax bracket, and suddenly they receive this inheritance, and now there's a tax bill associated with it. Yeah. That I'm certain, the parents would have liked to have avoided.
Yeah.
Had they started planning earlier. We've seen cases like that, where our clients are inheriting, maybe a parent's estate or IRA or 401k, and now it's sort of created some issues there. So I think life insurance helps with that to sort of transfer.
And you said the death benefit transfers tax-free. What about the accumulated cash inside of it? Because we've talked about that too. Does that transfer as part of that?
Yeah, absolutely. So, again, it's about how the plan is designed, but you can design the life insurance policy to include the initial death benefit plus cash value. So just as an example, if you were to say the original death benefit is $250,000, the cash value is now also $250,000 as an example. The total amount paid out to a beneficiary could be $500,000. It would be the death benefit plus the cash value that would be payable to a beneficiary.
Wow. So I think that's something that people don't think. You hear about, hey, I went on a game show and won a car, and then they pull the car up, and then here comes the tax bill. It's like, what? Yeah. I don't, I won this. Well, the same with what you said about maybe that inheritance in a 401k or something where, there's such a need for talking with financial professionals to go, now what? I got to pay taxes on this, and how do I access? But if you're thinking ahead and you're wanting to give the gift of legacy to your family, structuring some things like this so that they don't have that burden is huge. It kind of makes me think, these are the kind of things that, you hear the ultra wealthy and rich, have all these fancy strategies to avoid taxes. Well, this has got to be one of them that helps people, that if you're ultra rich, that's available, but you don't need to be ultra rich to do this. The common, person can do these kinds of strategies easily.
Yeah, 100%. Again, I think, you'll often see that wealthy people are very well insured. Some of the wealthiest people that you would think, well, why do they have insurance? They already have so much in assets, whether it be real estate or their investments. But the reality is they understand the benefit of life insurance, right? And they understand the benefit of having a tax-preferred asset. And so that's what life insurance really is. It allows you to save funds and do so in a tax-favored way. And so that's why life insurance is very, very popular amongst in my experience, from what I have seen amongst some of the wealthiest people that I know.
And there's a lot of I've heard examples where people are like, oh, well, you have to have whatever, $1 million in liquidity to be able to do this kind of program and that kind of investment. And with the life insurance, that's not the case. There's no limitations. You can set up one of these without being ultra wealthy. So I think that's a huge thing for people to think about. And also, when you think about, well, this just sounds just too good to be true. Well, this has been around for hundreds of years. In fact, isn't it true that banks and big corporations, they put their money in life insurance?
Yeah, absolutely. I think you're absolutely right. Is life insurance has been around for an extremely long time, and in addition to that, it is something that can be used not necessarily by just the 1%, but can be used again if structured properly, can be used by somebody that wants to save, a couple $100 a month, $500 a month, something of that nature. You can really start with something like that and really build up a good cash value if given enough time. And so I think that's the attractive part to it. Again, in and of itself, it is, life insurance is not the only thing that can get you to have a comfortable retirement, and I share that with my clients. However, it can be an important component, and it should be looked at. Obviously, there's qualification. You have to be in relatively good health and things of that nature in order to qualify for it. But the reality is that if you can jump that little hurdle, there are a lot of benefits that can be found in life insurance that cannot be found in many other asset classes.
Yeah, I just am so intrigued with all of these benefits. And so I think probably just at this point, someone's probably going, okay, help me understand how this can benefit me. So let's just wrap up with this, Emanuel. What's the best way someone could reach out, connect with you, and even learn more about how this could help their financial situation?
Yeah, absolutely. I mean, I think that the two easiest ways is I'll provide the office phone number, which is 562-464-3973, and easily can set up a consultation and answer any questions that you may have. And then, obviously, if you go to our website, you'll be able to find all of our socials and all of our ways to interact with us. But that website is www.avina, F as in financial, G as in group.com. So that's avinafg.com. And you'll be able, again, to find out all the different ways that you can interact with us and material that we have on this topic amongst a plethora of other financial topics and retirement planning topics as well.
Excellent. Well, Emanuel, thank you so much for coming on today. It was a real pleasure having you on the show and talking.
Yeah, it's always good to catch up with you, Mike. Appreciate it. Thanks for having me.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.